Hey everybody, Cantonese Cat here. No jingle today, just gonna go through a quick thing here. I do want to show off this indicator here, MCDX Plus. This can be found under TradingView. If you just search for MCDX Plus, you can see it's locked. This is done by KGIP123, Turtle Trader. There's a way to unlock it. It may cost some money. I'm not here to promote this. I'm just here to show you this. If you enjoy looking at what you're looking at, if you think this is valuable information, then you can feel free to try to unlock it and use it if you like. I'm looking at the weekly chart and I'm going to try to compare a lot of the indexes, trying to kind of like just show you what may be happening. With the MCDX Plus, the general thought is that the more red you have, these are basically standing for institutions or whales. The more bright red you have, the more institutions, the stronger they are, right? Yellow is just basically traders. They trade in and out. You can ignore that. Whereas green bars over here, light green stands where you have a light presence of retail. And these heavy green bars over here basically tells you there's a pretty heavy presence of retail and that the whales have left in terms of proportion, right? So what you're really seeing here is the weekly chart of SPY, S&P 500 index fund. What I'm showing you here is the 20-week moving average. And I'm just going to use that as a way to kind of tell you a little bit about the trend here. You can see that for S&P 500, really over the last, I would say about 9 weeks or so, you have a little bit of a declining of institutional, just a little tiny bit, right? If you look at the QQQ, this is going to be the Nasdaq fund, which includes a lot of the large cap, especially the tech companies. You can see that there really has been over the last like 11, 12 weeks or so, really been a little bit of a decline of institutional presence. You did have a little bit more institutional presence for the month of May, on the second last week of May. But overall, there's a little bit of declining trend. I mean, don't get me wrong, there still hasn't really been like a whole lot of retail presence, so the whales are still very much in it. But it just seems like they're a little bit declining, right? Dow Jones, same thing actually. It's really been declining a lot over the last 12 weeks. These are a lot larger cap stocks, the 20 really big cap stocks, right? Seems like money is just kind of like rotating out of it, if you will. So where's the money rolling into? Could it be rolling into small caps? If you look at the IWM, which is the Russell 2000 index fund for small caps, you can see that overall, really over the last few months or so, ever since the very bottom over here in October 2023, there has been a lot more institutional funds being rotated into IWM, and there really hasn't been that much retail because most retail really don't believe in IWM. They've been seeing outperformance of SPY and QQQ, the S&P 500 and the Nasdaq as well as Nvidia. They've been chasing that. IWM is a little bit of, like the institutions are just really starting to kind of rotate money away from the S&P 500 and the Nasdaq and starting to rotate money into small cap. And that was very apparent really over the last, I would say like 6-7 weeks or so. Whenever you have, if you just look at the 20-week moving average, you can tell like there is a little bit of how do you say that? There's a little bit of a stability here. You can see a lot of these big giant wicks down here. There's a lot of demand for the IWM index fund in terms of the small caps, as opposed to like QQQ, as opposed to SPY. They've just been kind of out there in space, and the whales are starting to kind of rotate money out from SPY to IWM. Now, what's interesting is Cathie Wood's ARK fund is still not really getting a whole lot of inflows, especially actually over the last 10 to 12 weeks or so. We can actually see a lot of institutional kind of just flowing out from the ARK funds interestingly into IWM. So we'll see what happens. I mean, like a lot of times ARK they're not really indexed, they're not really that big. It doesn't really take a whole lot of money to really like try to pump it. So they decided if they want to pump it, they can. But so far, it does look like there's a rotation of money going from SPY, QQQ to IWM. If you look at cryptocurrencies, you have a very similar trend that's happening over the last 8 weeks or so, really 10, 12 weeks or so. You have a downtrend in terms of institutional holding. And if you look at Ethereum, you actually have a little bit of uptrend over here, right? You can see this is actually a little uptrend that you're seeing over here. And the chain link, same thing. It's been going down, but over the last couple of weeks or so, really over the last 3 or 4 weeks, so there's been a little bit of uptrend, right? And you're also seeing some smaller cap altcoins such as Jasmine that's been doing very well. You see a lot of kind of inflow in terms of institutions. If you look at the Near protocol, you also have some increase in inflow. And if you look at something like Live Peer, you have an increase in inflow, right? So there's a little bit of a rotation too, I believe, from the biggest cap cryptocurrency, which is Bitcoin, over a little bit over to Ethereum. So I can and also over to like Chainlink. You can see that rotation is not just happening from large cap stocks to small cap stocks, but it could also potentially be happening with cryptocurrency here as well. There is a potential if this continues to happen, Bitcoin could still increase. Bitcoin is looking very bullish, but Bitcoin could potentially have an increase while the altcoin market, especially Ethereum first, may end up potentially outperforming based on what I'm seeing here on the data. Now, these data are more or less calculated. They're not going to tell you, like, they don't tag the whales and say, oh, you're a whale. You bought here, you sold here. I'm going to put you on the indicator. That's not how it works. Generally, I think how it works is it serves a little bit by using, looking at price actions, also looking at volume and trying to use certain calculations to try and determine how much of the buying could be due to whales and how much of the buying could be due to retail, vice versa with selling as well. So this is kind of based on a little bit more like a calculated way. So it's not an exact that's a whale, like it doesn't work that way. Although I did backtest some of these with like the Fintel.io institutional ownership data, and it does check out relatively well. I mean, it's not 100%, but that generally gives you a little bit of a clue in terms of what you might be dealing with. But it's very, very interesting nevertheless. Now, I just talked about the indexes, also talk about crypto. What about the other things that people have been very hot about? Like, for example, everybody's been talking about oil, especially for the month of March and April, right? Everybody was like, oil, oil, oil. Well, they're leaving oil over the last 8 or 10 weeks. You can see that. It's very, very clear. What about the US dollar? Everybody's like, oh, US dollar is so strong. Well, they're leaving US dollar over the last 6 or 8 weeks or so, right? The thing is, like, bonds still haven't really been able to catch a bid. It started catching a bid really around like November of last year, but it really just hasn't really been catching a bid at all. The good thing though, I think the retailers are getting less and less, and it does look like you might have a little bit of like a hammer bottom candle over here for last week, which generally is a pretty decent look to it. But you can tell that the things that are talked a lot about, like oil and the US dollar, and how there's large cap outperformance over small caps. Things might be changing based on just price action alone, and also based on what you're seeing here with these calculated well presence versus retail. Things might be changing. I really do think that IWM is really heating up. A lot of retail's already been squeezed out over here, whereas during the whole downtrend over here, there's a lot of them. But right now, what is really left, majority of it, is controlled by traders and controlled by whales and institutions. That's what these are supposed to be telling you. Anyway, I just want to do a quick video update here to show you these momentum indicators. If you enjoy it, please feel free to reach out to let me see. Yeah, please feel free to reach out to Turtle Trader, and he would give you any additional instructions in terms of what to do. All right, take care. Bye.